So let's see. So as I told you, we have a finance for the non-financial users, and the parallel we will study about the accounting skills. And accounting skills, this as I told you, this is the basic knowledge for the finance, the fundamental things. And first you have to understand the accounting skills itself. Use the terminology of the accounting. And then you will be able to, let's say, to use all the finance knowledge and skills in your organization, let's say, in your company, on your private company. Yes, sorry, I haven't introduced myself because as I know, most of you, some old students from the 2011, and some of you a new students one. My name is Miss Aliya Makarova. I'm actually originally from Kazakhstan. The last 5+ years I lived in Malaysia and studied MBA there. The last 2 years I'm living in Europe, which is a Montenegro country. And right now I'm actually on the vacation in Moscow. So the first class coming from Moscow, the second will be from Montenegro. My background, I have worked as a financial director in the company in Malaysia. The specification was trading. So I have a family, let's say, and now I already have taught the human resource management subject to the intake 2011 students. We have a great time. So I really enjoyed that. And as I know, new students also will be with me on the HRM for the next semester. So, and here is, I have to say that HRM, which is Human Resource Management subject, and finance, they are totally different. Because on the finance we will going to study about the, we will have practical exercises. But HRM was based on the theoretical things, theoretical understandings. So my what else I would like to say? If you have any question, you can ask me. You can chat me. Yes, I will share email with you right now. All the slides I will send you after the session ends. Don't worry. And at the end of the sessions, I mean at the end of this semester, you will have an exam for the finance. Exam will be based on the accounting exercises. This is my email, so you can email me with any questions related to finance. So I try to help you. So let's start the class. What do you think? And each session contains around 50 and 60 slides. And I have to say this is a very huge very huge content subject. And every slide is important. You have to able and you have to understand every slide. The finance class. And please be very give attention to the finance class. If you have someone, please let me know who is from of you have any knowledge and skills for accounting? Because this is very important for me. Who has any knowledge and any practical knowledge on the accounting? So I have a question that Mr. Akmal said that would be very pleased that if you could have practical finance. Of course, we will have a practical finance on this semester, but today the first session will be based on the theoretical things, because you have to understand further theoretical understandings on the finance. And then we will move on the practical. We have both practical and theoretical finance on the sessions. And very be carefully listen, please, and you have to remind all the things in your head. Yeah, I see that most of you, the beginners, you have no any practical finance. But don't worry, I try to explain very clearly and very shortly and very simply. This is why finance is, and MBA is always has explanation simplest and clearest. Because as you know, not all of people has knowledge on the accounting and so on. Some of us not good in mathematics, let's say. Yes, I know that, but don't worry. I'll explain as simply as clearly as I can. So let's move on the slides, okay? Because we have a limit time for the sessions. I try to give you as much as I can for today's session. So first chapter will be held on the introduction to accounting and finance. Sorry. Here is the topic and the structure of the lesson. We have it. So we will learn about the nature and the role of accounting and finance, about the accountant and user needs, about the plan and control, which is the part of accounting, business objectives, the major financial statements, and the most important thing, the concept of true and fair view. I hope you can see the slides. All of you can see the slides. So I am going to move to the next one. So the learning outcomes. Describe the function of account and the nature and purpose of the information provided. So you have to, after today's session, you have to describe the function of accounting, list the accounting concept and principles, describe the role of planning and control in accounting, recognize and be able to indicate the effects of transaction on the elements of an accounting question, and understand the balance sheet. As I know, most of you hear about the balance sheet. So today we try to understand what is actually balance sheet and how to prepare the balance sheet. So today the key terms you must be able to use. After this session, you will be able to use the accounting concept, the accounting equation, balance sheet, income statement, assets, liability, reserve for revenue, and equity. I know this is terms all are new for you, but today we will talk about them. We will try to explain what they are actually and what they contain. So main teaching points as the outcomes is same, nature and role of accounting and finance. nature and role means what kind of role of the accounting and finance takes in our life, and accounting and user needs. Who is the users of the accounting, and what is actually accounting? Plan and control means in the accounting how we are going to plan our budget and control it. Business objectives. Who is participating in the finance? People? Yes, right, people. But who they are? The company, the organization, the governmental. And income statement and balance sheet. This is exactly about the accounting forms. We will use the income statement, which shows the revenue or loss, and the balance sheet, which shows the costing of the business. So I hope this is you can understand the main teaching point. This is actually very simple. If you can't, just ask me, or you can chat me. So let's start. This is introduction to accounting. The nature and the role of accounting in finance. Accounting is a service activity. Yes, you can. I think you agree with me. This is account is a service activity. Most of you in the company you have your own accounter, or maybe you will get from the external service accounting. Its also function is to provide the quantitative information about the economic entities. Who is the economic entity? Economic entity means company, organization, or other bodies like government bodies, let's say like some international bodies, international companies. And the information is primarily financial. Financial means shows in the money, and it's actually in numerical. We can see on the statements, and it tends to be useful in making economic decisions. Means with help of accounting, if you can use the accounting skills, if you can use them, all the finance formulas to, for example, to calculate the risks, you can make the economic decision. You can make the decisions like in your company, buy or not to buy, take a loan or not to take a loan, for example. This is accounting. So let's move to the next one. So here it says if the entity means company or organization or private people or for which the information is provided as is the business, for example. The information is used by its management in answering the questions such as what are the resources of the business. So accounting is account and finance. Actually, finance means accounting. It helps us to give an answer for the question: what are the resources of the business? What debt does it owe, or what does it have earnings? That we have any revenue? Let's say our expense is too large in relation to sales. We have a loss or revenue. Are amounts owed by the customers being collected repeatedly? Means amounts when we have a debt on our organizations. This is the question as I am going to give you as examples. This is how accounting and finance answer for our questions. So some of you asking me use the pointer if possible. Pointer? I try to find it first, sorry. Do you mean like highlighter? Like that? Isn't it? Because before I didn't use the pointer one. Yes, okay. So, this is as an example, the main question in where in finance gives the answer, give us the answer and understanding of this kind of question. This is just example one. So let's see the next one. So here is, in addition, the grantors of credit such as banks, the wholesale houses, and manufacturers use the account information in answering questions like, are the customers' earning prospect good? Let's see, are the customers' earning prospect good? What is its debt paying ability? What is its debt paying ability means how much customers can pay for some kind of product, good or service. How much they can pay. This is we also when we are going to introduce a new product in the market, we always analyze how much people can pay for this kind of things, for this, let's say, for this computer or for this book or for this kind of, let's say, good, for this car. How much they can pay for this kind of service? How much they have actually on the budget? And has it paid its debts promptly in the past? If they have any kind of loans, let's say loans, maybe they don't have, maybe the people do not have free money to buy this kind of things. And should it be granted additional credit? The people, let's say people will say customers, do they need an additional credit to buy a new TV, let's say, or a new car? This is the questions where the finance gives answers. Prospects means potential good. I mean, the question, are the customer earning prospect good? Here is this one. Do the customers need this kind of TV or this kind of computer in the potential, in the foreseeable future? Of course, we will analyze first the market, we will analyze the customers, and this is the finance which gives the answers for these questions. So I have a question, what does mean the granted means? Where is it? You have, should it be granted additional credit means granted, should the customers take any credit granted? Taking means should the banks give any credit to the customers to buy a new TV? This is on the simple words. I hope you can understand me. Do you? Yes. Okay, right, good. So let's see the next slide. So likewise, the governmental units use the accounting information in regulating the businesses and collecting taxes. This is real, because most of you, I hope you know that most big companies, they report their statements in the gazettes or journals, in the public, let's say the public journals. They report their statements each year, and but this is like resources for the governmental. They can see, they can regulate the businesses, because some of them could be, or like a take a monopoly in the market. So, and the governmental unit, they regulate this, the relation between the companies in the market, and relation between the customers and the organization. And they collect taxes. Let's say some of company, they publish the statement which shows the revenue of the company. If the governmental units, like I'm sitting on the governmental department, I can see that, oh, they have a good revenue for this year, and in past 5 years they have a very high sales, very good revenue. So maybe we can increase the taxes for this kind of company. I mean, the company all specialization or are different. And this is how they are using the statements, the governmental units. And next statement, the labor unions use it in negotiating the working condition and wage agreements. And investors make wide use of the accounting data in investment decisions. It's same. Let's see. You are looking for a job, yes, right? So you can use the published statement of the big companies and see the expenses on the salary, how much they expend on the salaries of the staff, how much they can revenue, and you can give your condition. For example, I know that your company is not so, I mean, your company is a huge one, got a revenue each year, so please maybe you can pay for me higher than you have, than you are paying already for me. And about the investors, they make you see, the investors, they also use the accounting data to invest the decisions. This is the same. The investors, like investors, the labor union, the governmental, they are accounting users. Means they use the accounting statements, the balance sheet, to make some decisions. Work in that company or not, increase the taxes or not, for example. Make some investments for this kind of company or not. Okay, this is like investors. They see the sorry, the statements, the balance sheet of the company. They see, oh, this is company has a high revenue. Maybe we should invest, and we can get also a good revenue one. Or they can use, like, this is a company not so good. I mean, the statement is very bad. They have some loss. So it's not necessary to invest for this company. For example, this is just simple examples for these two statements. So I hope you can understand. So let's move to the next one. So I have a question that asking about this is about accounting or to finance. This is all to accounting and finance. As I told you, the accounting is a basic fundamental of the finance. So the finance already include the accounting. In the finance, we use the accounting, means like from the accounting we use the statements, balance sheet, cash flow, and so on. And also we manage our risk. We do some decisions, and to manage our risk and do some kind of decisions like buy or not to buy any kind of land or property, we have a special formulas. We will we will calculate with the help of the statements, and we can see from this. Is it like Is it very, is it interesting investment or not? Yes, right. Finance is a money management. Finance is a risk management. Finance is the management of our strategy. This is about finance. Finance includes everything. But first, we will going to teach about the accounting, because this is as I told you already, this is a basic understanding of the finance. So let's see the next slide. Information for use in answering the question like the one listed earlier is convenient accounting reports. I already explained to you. If the person is to use this report effectively, he or she must have some understanding of how the data were gathered and the figures were put together, and he or she must appreciate and understand accounting terms and concepts. You see, here we say that if you, after this final semester, if you can use effectively and understand the reports, like statements and balance sheet and cash flow, and you will be able to understand how this information was gathered and why these figures they exist here, what they are actually, and how we did collect it. And you will be also able to understand the accounting terms and concepts. If you have the friends who has a knowledge in the accounting, you can also have a talk with him or she about the accounting, about the finance. After this class, you will be able to understand and to have a talk with any accountant. This is what I would like to say. So next slide. So here you can see the work of an accountant. In the public is auditing, the management advisory services and tax services. And the private, the accountant practice on the general accounting, on the cost accounting, budgeting, and internal auditing. Auditing. So, don't you know what is auditing? Auditing means who is the auditor actually. For example, we have a international Big Four audit companies like Ernst & Young. Like any company can get their series. Audit means to check, to gather and check the accounting and finance of that company, to check their report. Are they do correctly? Are they have a true and fair view of the accounting? This is the auditing, the external or internal, the checking of the company's budget and statements and cash flow. Tax services. Here I have a question. What is the tax services? For example, I can give you an example. When I lived in Malaysia, I had a company, and I used the tax services. In the public, we have service companies which give service on the taxes, how to calculate taxes, how to report taxes, and this is the tax services actually. Accountant also, any accountant, he or she know about taxes in particular country, for example. What is taxes and how much we have to pay taxes every year or every month. This is what accountant can be auditor or can be a taxer. Taxer means calculate the taxes. This is a tax services. So this is the accountant. What do accountants actually in the public or in the private sector? So let's see the next one. The major finance statements. This is a major finance statements or any organization or the company. So accounting statements are the end of the product of the accounting process. So as I have told you previously, the accounting is a series, is a process actually itself. And the end product of the account is a statement, like income statement, like balance sheet, like cash flow. And these statements, they are actually a good things to begin to study the accounting. So for example, here is given the accounting statement like picture of profitability, the income statement, and the trading and profit and loss account show us the picture of profitability of the organization or the company. Profitability means how much company earned in this year. This is in the simple words. So income statement, when we see the income statement, this is like report. At the end of this class, I show you what is the income statement. And we can see how much, how many sales company have and how much company earned in this year. They have a profit or loss in the accounts. So let's see the next one, the picture of the financial position, the balance sheet, means the balance sheet shows us our expenses, in particular how much we had expenses and what we did, what we bought in this year. For example, we have any loans or credits. So picture financial position, how much you are able to make a business, and the balance sheet shows you how much you are able to buy anything, any property in your business or continue your business actually. This is the balance sheet shows us this is the positions. Here is, I have a question that the income statement is a short part of account statement. No, this is the same actually. Income statement it serves the account statement. Income statement shows everything. What kind of activity company has, what kind of liabilities, what kind of loans company have, or what kind of property company have, how much they earn in this year, how much they lost in this year, for example. This is just as examples I explained. So let's see the next one. Sorry. So, and we have the understandings, the concept like accounting equation. You see, accounting equation. This is like asset is equal to our capital plus liabilities. So let's move to the next slide. You can see the accounting equation. Here is we will talk about the accounting equation in details. Please move to the accounting equation slides. Here is we have a topic and the structure of the lesson. Do you remember I told you that we are going to study about the finance with the parallel accounting. And for example, in the finance we have a terminology like accounting equation. And I have a separate slide like accounting equation which explains in details. And right now I will explain what is assets. So here is the top goal and the start of the lesson. Introduction to accounting equation and analyze the business transaction based on the accounting equation. The learn outcomes. At the end of this topic, you should be able to analyze the transaction using the accounting equation to understand what is the accounting equation actually. And if you have mastered this topic, you should be able to use the following terms in your exams, like assets, liabilities, and capital. Capital owner's equity. Right now, I'll explain you. We have a. So let's see. You see the introduction one. What is accounting equation? Accounting equation is the basis of the accounting that will always be used each time we record a transaction. It consists of three components of the basic elements, which are the first is asset, the resources that can bring economic benefits owned by the entity. Entity means company or organization. So the assets, as examples, is the cash, a simple cash in the company, the buildings, like some properties like buildings, cars, and fittings, like office and all the things which exist in the office, like table, for example, tables, chairs, computers, and so on. This is the asset. All is assets. And liabilities. This is the rights or claims made by the loan providers. Means, you, for example, I am company and I got I got a credit in the bank. So means I have a liability beside of the bank. I have a loan. The bank provides me a loan. This is liability. You have you have a claims in front of the bank. Or bank has the rights on you because you got the credit. This is liability. And capital, the rights to claims made by the owner itself. Capital means how much I have invested in the company. Example, I invested $100,000. This is my capital. I'm like a shareholder and I invested the capital, 1,000, how much is it? $100,000, for example. This is the capital. I hope you can understand these terminologies: asset, liability, and capital. So I have questions about the liability. The company will have an amount of money. Yes, yes. Liabilities means your just not. Your commitment, your like a responsibility. Not only bank would be like as the provider of the money. Any company could be also like your partners, for example. So liability means when you, for example, as you are simple people, we are going to the bank to take any loans. So when bank gives me a loan, I have a liability to the bank. Means bank has some rights for me because I got a loan, I got the money from the bank. This is a liability. Like liability could be in different let's say in different things like a cash, could be cash like some buildings, or you can give a car. For example, you can get a car in leasing from the bank or any company. Also, you have a liability. So I hope this is three main concepts of the accounting you can understand: the asset, liability, and capital, right? If you didn't understand, please let me know. So I have a question. Question from the Mohammed Aman Nawadi, asking that if we have a partner and he invested 10,000 in the company, is it liability or capital? If the partner wants to be a shareholder, he invested like a shareholder. This is a capital. If he just give like a credit in 10,000, this would be liability. We have to see the conditions. The partner gives us money based on like to be a shareholder of the company, or just give us a little credit or loan. So you have to see the conditions, on what kind of conditions we are going to take a money. So this is very interesting. And I have a question about what is the capital. Capital means capital. Here is all the terminology based on the organization, like capital of the organizations. The capital of the organizations. In any organization, for example, we have as shareholders, the people who actually opened that company, who actually based this company, and how much they invest on this company, all this will be a capital. They can invest in money, or they can invest in property like buildings. For example, I'm going to open a shop, to sell some kind of products, and I have an apartment, so we can use this apartment like a capital. I can sell this apartment and use this money to invest for my company, and this will be a capital. Or I can use my apartment like a shop. I can open the shop in that apartment, and also this apartment would be a capital. In the balance sheet, we show that this apartments costed this kind of money, like 50 or 100,000 US dollars, and this will be a capital. The owner's money means owner's properties invested to the company. This is the capital. So you remember the accounting equation? We have a formula. Asset equal to capital plus liability. Means capital. I invested my property apartment in my company, and liability means I have taken some loan from the bank. All together will be asset. Asset means how much I have, how much I get from the internal, and this will be asset. Asset here is, as examples, you can see there could be a cash, a buildings, and fixed, and so on. This is resources, and this is the resources that we can use in our business. For example, to to open the factory, to build something, to buy something, like in trading, you buy some goods on the very low price, and you are going to sell it to others on the high price. And to buy something, you must have some money on a cash or non-in-cash. So this is the asset. So I hope you understand. Here is the asset is equal to capital and liability. Do you understand me? What is the difference? So yes, capital. So let's move to the next slide. So if you someone didn't understand, this is three concepts. Please let me know, because they are very important, and we always in the next session we always use this is the three concepts. You must be able to use them in the exercises on the exams also. And if anyone have a mistaken or misunderstanding about this, ask me please. So I have a question that about the capital, the asking is equal to revenues minus expenses. No, capital, you see the formula asset equal to capital plus liability means if we change the capital, put right here, would be the capital equal to assets the minus liabilities. You got to you have given some wrong formulas. I'm going to chat you right now. If you change just spaces, the capital, for example, is equal to asset minus liability. This is the formula. Capital equal to assets minus liability. This is like in mathematics, you just have to change the spaces of the capital, assets, and liability. You can change and you can get what you would like to calculate. So let's see the next slide on the accounting of transaction analysis. Okay, to here we will move later a little bit, because this comes here. If you can see the transaction analysis, the accounting questions, you see this is exercise. We will use them later, because I have to go back on the chapter 1 to introduction accounting and explain other theoretical things, and then we'll back to the accounting question, right? All right. Yes, right. I have a question from the Muhammad Ahmad Nawabi asking. I mentioned that the slide, the assets bring the benefits, and the question is that benefit could be benefit or there can be loss. Of course, any company, when they invest some money, after that they can get a revenue, which is the benefit, or they can lose this money. Also, it brings a loss. So let's move to the introduction on the accounting and finance, the major financial statements. About accounting equation, we already have the talk. I hope you understand it. The asset is equal to capital plus liability. You have to remind this formula, please. Just like a sun, just remind in your mind, in your hand. It's very important. So let's move to the next one. So we also have accounting concepts and principles. So we have 8 kinds of accounting principles. This is the principles. They remain always same, and they standard for all of countries' accounting in any reports, in any understandings. So let's study them. The business entity concept, the cost concept, the money measurement concept, and the going concern concept, the dual concept, the materiality convention, the prudence convention, and the consistency convention. So each of them, I'm going to give you explanation. Oh, this is strange. Oh, okay, okay. Moving to plan and control. So you see, I have a plan and control part of this session. Oh my God. Yep, accounting concepts and principles. So I have a separate slides for these principles. I have a separate, like, in detailed explanation. Right now I'm going to share with you. Give me 1 minute, please. Here is the accounting concept and conventions, the slides. So, topic and structure of the lesson. Oh, sorry. This is all 8 principles of the accounting, same as from the first slide. Here it is. You see, the accounting concept principles, they are same with this topic and structure of the lesson. And here, in these slides, we have a detailed explanation. This is, okay, this is not so important. So, here is introduction. The accounting concepts and the conventions provide a good understanding and the justification for any accounting treatment and adjustment. And the accounts prepared can be used for comparison between the years and the company consistent. So this statement says that the accounting concepts, the accounting principles, the 8 kinds of principles, they provide us the understanding about the accounting process, actually. And now we are going to understand each of them. What means, for example, the separate entity? Let's see. Sorry, separate entity means separate company or separate organization. For the purpose of the accounting, an entity is assumed to be separate from its owner and also other entities. Example 1. They assume that you own a business, for example, and your personal economic activities must be kept separate from the business economic activities. So what that means? For example, I have a company, as I told you. I have a company. I have invested some money to there. And I have my own budget in family. Like we have some expenses to travel somewhere, to buy something to our home. And this is a separate entity, means your family budget, your own private budget, must be separated from your company budget. Do you understand this one? When you do some expenses in your family, okay, you bought a TV, you can't put this cost in your company, for example, budget, in your company statement. You can't put the cost because it made in the family, from the family's budget. This is the means. Or for example, you got some benefits revenue from the company, and you cannot just use them to buy a new car because it comes like a cost in your company, and cost you cannot take money and put in your family budget. So you have to answer, this is a separate entities, means separate separate your family budget and your company budget. This is separate entity. So let's move to the next. I think this is simple. to understand. The assumption of going concern concept. So according to this assumption, an entity is assumed to continue to exist in operation in the future. So in accounting is always process, right? As I told you, it's a process actually, and it's always continuously processed. We have, for example, we for year 2011, we have some report. We have like a statement. We cannot just close it to liquidate all the money and properties. We cannot, because we have a going concern concept. Going concern concept. We will continue our business on the next year. This means going concern. The business continues. The continues of the business year on the next year, on the future. So this is the assumption of the going concern. This I think you can understand. Let's move to the next principle. I'm sorry. I got a little cold. So I have a question that would repeat, please. So going concern means you have a company, you have some statements, you got some expenses, you got some loss or revenue or benefits. Means when we have at the end of our year, we should to report to publish our statements, and we are not going to close our statements, our let's say our company. We cannot just close and liquidate it. It will continue for the next year. If you already have seen the balance sheet, we have some balance on the end of this year, and for the next year it goes to the next year with the same amount. The balance of the company, which is, for example, you have a 200,000 balance in our company, and on the next year it will just move at the next year, and will be in the balance from the next year also. All remain same, will continue. You see, the entity means company. Company assumed to continue to exist, actually, to exist in the market, to operate in the future. This is the going concern. So let's move to the next one. The assumption of monetary union. This is simple. So according to this assumption, all economic activities are measured and valued in the currency union. Means in money, like in Malaysia in ringgit, like in Russia ruble, like in Afghanistan. Sorry, I don't know what kind of currency you have. Like in USA dollars, like in Europe euro. Yeah, Afghani. Means all your budget will be, the figures shows in Afghanis, right? In Afghanis. All money comes, all figures comes in money, and money, the currency is Afghanis, in Afghanistan. So, and what kind of weaknesses of this principle, the monetary unit? It restricts the scope of the accounting. Only the transaction that can be measured in monetary terms will be taken into account. Means like we have like two kinds of assets. We have two kinds of investing funds. The investing funds like can be measured in money, which is buildings like cars, like or cash itself. And the second part, it can be measured in knowledge, stuff. Let's say the staff, you are a staff of the company. you have some knowledge, you have some skills. This is also assets. This is also resources of the company, right? But this resource cannot be measured in money. This statement says that the resources like knowledge, like skills, like your background cannot be measured in money in the statement. Of course, it's measured like your salary, but salary measured like expenses. Cars also, I have a question about the cars. Cars, they are measured in money. Because if you have a car or you have a building, how you can see how much it costs? You just open the market and you can see how much this car will cost in the market. And it's measured in money. Cannot measure the things like knowledge, like people, like their knowledge, like their skills, like their background. This cannot be measured in money. And this is the weaknesses. Do you agree with me? Because our knowledge, our skills is actually important, and we already made some expenses to get our knowledge. Like you have your MBA online, because you are going to get a knowledge and skills, and new knowledge and skills, and get some practice, and you cost money for MBA. And in the in the company statement, it cannot be measured. Why? Because first, this is your expenses, and second, this is not in materiality, knowledge and skills. This is what I want to explain to you. And the next weakness is, sorry, it assumes that it assumes that the value of the currency is consistently stable, and whereas we know that the currency value is always changing. This means like, for example, today you have bought a car to your company to use in the business. You cost $50,000, and in the market, after 2-5 years, the price will change for this car. It will be like 60, maybe. It will increase. For example, it will be 60,000 or 70,000. But in accounting, you show the price that you bought, 50,000 only. But in the market, means in the market, in the external market, it always changes. The price for goods, the price for cars, for buildings, for products, always change, right? They will increase or they will decrease, and we can make some. We can do some analysis and we can do some forecast, but we cannot put the changes in our statements, in our budget, because we already bought for 50,000. So this is the two weaknesses, that some assets, some transaction cannot be measured in money. The knowledge, skills, as I told you, the people, stuff itself, and that the money always change, means the currency of the money always change. So let's move accounting period. So sorry, give me 5 minutes. I'm going to get a cup of water. So 5 minutes for the break, please. Thanks. Hello, I'm back. Thanks. So I have a question that all here is: what is the currency unit valued and measured by? The currency unit is like dollars in USA, like euro in Europe. This is the currency unit. Like Afghanis in Afghanistan, like Malaysia ringgit in Malaysia. This is the currency unit. Okay, asking the the time for the prayer. Okay, okay, I give you 5 minutes. Thanks. I will mute my microphone for a while. Hello, I'm back, so let me continue the class. Do you agree? Okay, thanks. So let's see the next principle, accounting period. It's a lifetime of the entity divided into a certain period for the purpose of reporting its economic activities. Like any organization, they 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 have an accounting period. Means they, for example, you see the starting date, like you have opened the company, and your starting date could be from the 1st January 2001, and the ending date would will be the sorry the 31st of December 2001. This is 1 year. Remember, please, the accounting period in the international is the 1 year, consists on the 1 year. If you start your business during the year, for example, from the 1st of July, so your ending date will be on the 30th of June. If you start from the 1st of March, for example, 2012, the last ending date will be 28th of the February. This is the starting date and ending date. Refers to the income statement. Remember this. Means you are not going to end your business on the 31st December. You just close your report on the 21st December. Yes, I have a question that yes, accounting period is consists on continues in the 1 year accounting period. We open our accounts on the 1st January and close on the 31st December. And we have some report, for example, on the end of the year. And next, for example, you start from the 1st of January 2001, and you close your accounts, you close your balance sheet on the 31 December 2001, and the next year you open same on the 1st of January. This is accounting period. Just this is just to you have to know that the accounting period is in the company uses for 1 year. You open starting date and your ending date. You close your accounts. Just sorry, I have some questions. Is it doing anything to fiscal year? All the activities life cannot be. Here I have a question that if the activities life are the less than 1 year. If it's less, it means you close your company early than you planned actually. The activities cannot be. This is not about that activities. Once activities could be 1 year, once two. What would be one for 1 day? We have some activities for 1 day, buy and sell, for example. But this accounting period is that the statement shows like some expenses which is made during the 1 year. This is the accounting period. No, here is I have a question that should be accounting period mark the calendar year. No, it could be different. You see, we have 1st January, 1st July, because some of companies they opened not from the 1st January, maybe they have opened from the July, March, or in August you have opened your company, and from this period you are going to start your accounting, right? So this is accounting period. We have a principle. Let's move to the next one. Okay, the principle of the historical cost. What that means? According to this principle, all the business resources will be recorded based on the historical cost, which is the original cost at time of purchase. What that means? For example, you you have bought a building for the business, or let's say not building. Let's say you bought a computer for 1,000 US dollars, and in the income statement, in the balance sheet, in the all reports, it will be the cost will be in the original. It won't change time by time. It won't change in the future. It always remains same. For example, I'm going to type for you. You have expenses at the company. Expenses like a computer, which costs 1,000 US dollars. For example, in 2012. And let's see, you see, and on the in the balance sheet, in the income statement, we will show the expenses of the computer for 1,000 users. In the next year, on 2013 and 2014 years, we will show the same expenses with the same amount. Maybe in the next 1-2 years, the computers, the price will increase for that or will decrease. But we always show the same historical cost. We always will show for how much we bought on that period. Do you understand me? What means the historical cost? You bought a car for 20,000. You show in the statement that you have expenses for 20,000, and for the next period you will show the same amount, 20,000. This is the historical cost. Yes, and the purchasing cost for the assets like buildings, like cars and computers and fittings remain with the same price, with the same cost. It won't it are not changeable. Okay, I have a good question. Here is I'm the asking. So, how shall we tackle the difference between the statement and reality price? Of course, because the balance sheet, and we always when we buy some goods for the company, like some buildings, cars, computers, some fittings, all this is assets. When we buy them, we put on the statement the historical cost, right? And after 5 years, the historical cost remains same, right? But we already have used this car for 5 years. We have got some expenses for repair, for example, right? And we have a statement like amortization. Do you know what is amortization? About the amortization, I will teach you later more detail. In the amortization of any cars, amortization of the buildings means how much we cost to repair this car, to repair this building. And this cost also will be shown in the statement, in the balance sheet. And how to calculate amortization of anything I show you also. We have several methods how to calculate them. Yes, depreciation cost I have here. The amortization shows our toward the depreciation cost. It also will be tracked in the balance sheet. For example, in the statement, you bought a computer for 1,000, as I told you, like expenses. Computer for 1,000, for example, in 2012. Of course, after 1 year, the price will decrease for this computer because it's already have been used in the business. In the market, maybe price also will decrease, because every year, every time we have a new kind of model of the computers, and the old one will decrease. The price for old computers, for old model will decrease. And then in expenses, we show the depreciation. Depreciation cost. Depreciation of the computer, which is for example 200 USD. You see, we show at the end of the year in 2012, and original price of the computer, original price for the next year, original price of the computers. Just a moment, I am going to type it. In 2013 will be 800 USD, right? 1,000 minus 200, or the depreciation of the computer will be 800 USD. But we always, yes, Mr. Muhammad Aziz showed me the the right answer. But always in the statement we show original price of the computer, which is 1,000 USD, and plus after that we show the depreciation cost of the computer for 200 USD. So let's move to the next one. I think this is understandable, the historical cost of the principal, right? Let's see the next one. We have principle of income recognition. The three conditions that must be complied with before income is recognized are: the seller had performed the necessary actions to obtain the income. Income can be measured objectively, and income can be collected. So, when we recognize the income, we should remember that we already have got this income. This income, like money, like it could be in the cash or it could be in the money in the bank. We already have this money in our accounts. This is we cannot estimate. Okay, for example, I already have some sell. I realized some sell the goods, and maybe the customer says to me like he will pay for me for the next year. And I have no any invoice or no any confirmation that he will pay for me, and we cannot put this income to the statement that we already have this money. Sorry. So okay, I have a question that today's class actually is for 2 hours. I know that each class should be for 1.5 hours, but we have a huge information for finance and limit time. And I teach every time for 2 hours. Is it okay for you? If you are not okay with the 2 hours, I teach you for 1.5. Just let me know. Okay, we have 15 minutes. I try to explain everything what we have for today. So the principle of income recognition. I hope you understand me. First, if the seller had performed the necessary action to obtain the income, means we have sold some goods. This is the actions. I sold the goods. I sold the goods. For example, I sold the goods. This is the actions. And income can be measured objectively, like I sold the goods based on the market price. This is the second. Income measured objectively, that my goods cost based on the market price, right? And the third one, the income can be collected, that the customer pay for me for that good, for that product. After these three actions, the income will be recognized in the statements. So I have some question about the class. So we are going to finish our class at 8 o'clock. So we have another 15 minutes. Yes, right. I have a question that from Mr. Elias. He is asking, if the income is not collected, it's not still in our accounts, that means it's liability. We have a liability that the customers, we have claims and rights for that customer, because he must pay for us for that kind of product. So remember, this is principle of income recognition. So let's move to the next one. We have a limit time, please. Some principle of matching. This principle matches the expense with the revenue. So first step is the recognition of the revenue for a specific period, and second step is the recognition of all the expense involved in ascertaining the revenue. So when we do business, we always have some expenses, right? We do efforts. We use our minds, we use our knowledge, skills, and also we use money, like for example, like cash. This is expenses to buy something, to do something, to do a business. And revenue is a benefit which is obtained from this effort. We have some expenses, and after these expenses, we got a revenue, like trading company. Like for example, I had a trading company, which is I use the car payers. Just one. I use the car. This moment. I use the repair parts from the car. So, for example, in Malaysia, I have bought some repairs parts, and I did expenses, right? I use my money, I did expenses, I bought repairs parts, and then I sell it to, for example, to outside. I sell to another company which was in Germany, and I sell this repair part to the Germany company. And after that, I got a revenue from this transaction. I bought on the low price and sold a little bit higher price. And difference, as you know, this is the benefits. This is not, it's not a clear benefits, but it's already I got. If I buy in low price and sell on a high price, of course I will get some revenue. I will get some benefits. So this is principle of matching. Means you always in the business you do some expenses, and after that you will get some revenue, or you can get a loss. Of course, this is also could be, for example, I bought it on the price like on the 1,000, and then market has been changed, the price increased, and I cannot. Oh, sorry, the price for decreased, and I cannot sell the parts for 2,000. I sell for 1,000 or on the original price, or I will sell uh, on the low price from the original, and of course I can get the loss. With this principle of matching, always from the expenses during the business you will get revenue, you will get benefit or loss. Yes, revenue. Here is asking ask a question. The benefit revenue. Yes, the revenue is the same as the benefit. Benefit, but benefit uh, uh, is it's not clearly shows as a benefit. The revenue after all expenses shows how much totally we get the benefit. Yes, please, all the class students who has any question, please put the question, publish the question to everyone. So because maybe you have the same question, and I will try to answer, and you will get the full information. So let's see the next principle. Oh, you see here is revenue minus expenses will show us profit or loss. If we have a plus, would be profit, or if you have a minus figure, will be loss. If the revenue is more than expenses, it's a net profit show us. Means we have a profit, really good profit. If the revenue is less than expenses, we have a loss. Here is this figure shows the relationship between the revenue and expenses. Revenue minus expenses, which is made during the business, show us the profit or loss. I think this is simple to understand. So let's see the next one. We have a principle of the full disclosure. The principle stresses for the full disclosure of all relevant information and material in the financial statement, whether in the statement itself or in the notes to the accounts. So that means the information in the company which is related to the business would be same in the accounts notes of the accountant and in the statements itself, which is, as I told you, the financial statement is the income statement, the balance sheet, the cash flow. This is all the three kinds of formats of the statements in the accounting, in the finance. Who have a question for that principle? So means all the information in the accounting must be open, must be clearly understood, and must be open to any users, like privately users, internal users for staff, or published for the external users, like governmental, taxes department, and so on. So let's see the next. So we have a materiality principle. The materiality refers to the effect of an item toward the overall operation in the entity. An item is considered immaterial if it does not affect the decision that will be made. So all here is, this says that assets, all assets, they are materiality. They are materiality. They are actually they are participate in the business, like cars, like stuff. For example, first is the stuff. Second, buildings, cars, computers, fittings. This is all materiality, and they are all affect the decisions making in the company, any decisions. If some items they are not affect the decision, they are not materiality. Now here is materiality means in the company, in the organization. Like we have assets like stuff. Yes, right. We have a we have a we have a buildings, like some properties. We have a cars, computers, fittings. We have office tables. We have chairs. Yes, computers, right? And this is all is materiality. And these things, those things, they affect any decisions of the overall company. For example, the company, the shareholders want to move to another country. They cannot just leave everything and just move to another country, because they have buildings, they have people, they have the fittings, and they have to manage how to move, how to get it, maybe to sell and buy a new one. I mean, about the fittings, buildings, and so on. Maybe to remove them. And this is all materiality. This is which affect the decision making of the shareholders, of the company management. But for example, if you have most of companies, they have a special study program. Maybe they have a program for the staff, like go to Europe or somewhere to get to share your practice. And the people who is going to there, they are not actually materiality. They are knowledge and skills inside. They are not materiality. But expenses made is materiality. But what they got inside in their mind, like knowledge, skills, it's not materiality. This is what I would like to explain to you. You don't worry. This is the principle that you have to remember and understand. First, understand and remember. They all won't be in the exams questions. So let's see the next one. Quick review question. So what we have here is so you see, you have a quick review questions. Fill the blank with the most accurate answer. The final statement prepared on a yearly basis complies with the assumption of what? The principle that requires the economic resource is the of the entry to be recorded at the original cost at time of purchase is a principle of what? You have to recognize the what kind of is that principle. The information must have a feedback value, forecast value, and be present on a timely basis. So if you do understand this topic about the accounting principles, you must be able to answer for these questions. So this will be as a homework. Please fill these blanks and send it to me on my email. If someone you can't to answer for this question, we can go back for them on the next session. Is it okay for you? Oh, and already the section going to end. It's already 8 o'clock. So please, this is the homework from the accounting concepts slides. The quick review question. Try to answer for those questions. Fill the blanks and email to me. And if someone cannot give answer or didn't understand the question, we will try to talk about together. We will try to answer together. I will help you. And about the accounting equations, we haven't finished the slides. I will teach these slides. You see, we have some kind of formulas, solutions. We will do on the next class. We'll do next class based on practical exercises. Can you see that? Sorry. And from the slides of Introduction to Accounting and Finance, we haven't finished it also, and we are going to finish on the next session. But you have to review again all these 3 kinds of slides: the Introduction to Accounting, the accounting equation, and the accounting concepts. Please review it. Not one time, a few times. It will be great, so you can understand more easily. So how I can? I think that I will email to you, because I already have a list of the students. I think with the emails. After the session, I'm going to email you all these 3 slides. Is it okay? All the 3 kinds of presentation will send you by email, don't worry. And before starting the next session, you must be able to understand all the terminology of the accounts that we use today. So questions, any questions for today's session? Yes, and also I have e-books for the finance. We'll send you with those slides. But I have to say, for the finance class, besides of the classes session, you have to do your homework. You have to review books every day for every session. Because when we will have the exercises, that will be difficult, because we have online session, not like offline. I can see you, I can explain you, I can write on the desk, this is things, this what that one. We have known this kind of the ability. And for this, to understand the finance, you have to study yourself at home when you have free time. Sorry, got a little cold. So any questions, and we can finish our class. Thanks a lot. I really enjoyed the class, but I had a few students for today. This is very sad because the first sessions are most important, actually. Thank you. Bye. Going to stop my recording. Thanks a lot.